Hey, I'm back again. This is a spicy one. And remember, only the paranoid survive. So always question everything. I'm going to jump into kind of a cursory analysis after the first 90 days of the ETFs and see, is there any correlation between ETF money flows? And if so, how? How much of an influence do these ETFs have on the Bitcoin price? What can we pull from mathematics when there's crazy money flows into Bitcoin? What confused me the most is a ton can be dumped and the price can go up. A ton of money can flow in and the price can go down. The question is how and why. And remember, I'm just a guy on the internet who looks at numbers. That's all I do. And I'm just playing with numbers. So I don't know anything. But let's dig in to see if we can find any interesting patterns, correlations as we go forward. Thank you to the team as well in Patreon. And we have a new one who pop this up every day. Margie K, I am Patreon member and we are family. Love it. I love it too. Margie K, thank you for being here. So first of all, the big question we have to ask ourselves, are markets manipulated? The answer is hells yeah. So markets are manipulated through all sorts of tactics. For example, misleading trading activity, spoofing, etc. And there's tons of papers on that. Then there's pump and dump schemes, which involves artificially inflating a stock. We see that with fake electric truck companies. We see that all the time in crypto. Again, yes, it's there. Then there's systemic manipulation with derivatives. People kind of going, heavy long, heavy short, etc. And then there's information asymmetry. Thank you, by the way, Sir Winston, for coming. Information asymmetry means insiders have information, and I won't mention the political leaders that do that really well. They can get into positions very early because they have that information asymmetry. But I'm going to talk today about market maker manipulation and if that is even a thing. And again, this is spicy, and I'm just a guy on the internet playing. I'm not making any accusations here. I'm Colt. Thank you for coming too. I'm just looking at numbers. So what do I know? Anyway, one thing I spotted January 31st of this year, after the ETFs, I noticed, and I'll read this tweet because it's out there. And the good thing about Twitter is it lasts forever. Bitcoin spot ETF could be managed in a way where fund managers sell the ETF shares based on the Bitcoin price during the stock market open hours, then buy the spot Bitcoin at night when the price falls. And this strategy could lead to at least 3% spreads, and especially over the T plus 1 plus T plus 2 OTC over the counter trading terms. T plus 1 means they have 1 day to fulfill or 2 days to fulfill the ability to buy the Bitcoin. So they pull in the cash from selling the shares, and it's more complex now. I'll get to that in a minute. And then they got time by which to execute. So what if you could actually bring the price down? And there's tons of opportunity. Like if you are running an ETF and you're just charging 25 basis points, the money is in the spreads. People think, oh, the poor fund manager, they're not going to make any money. No, they make a lot of money. But not only just the spreads, but they can also make it here with these kind of delayed buys, which is really weird. Anyhow, let's dig into more. This is the ETF returns versus fund flows. And this is a regression, Bitcoin, and it indicates about 10.7% of the variability in Bitcoin returns is explained by net inflows into spot Bitcoin ETFs, which is a very pretty positive correlation. But I'm going to dig a little bit deeper than that. I'm going to share this chart too, and this is just for the first 35 days. And what you have here, and I covered this a week ago, and it kind of triggered all the research into this. Your money flow is in black, and then your price is in colored. And of course, majority of the time the price goes up, but sometimes the price goes down even after large inflows. And that intrigued me. So I decided to analyze the first 92 days. Let's see what we come up with. Before we do that, though, I do want to spend a second because everybody is confused. They think they're buying shares from BlackRock or Fidelity or whatever. No, there's a market maker in there, which can be wholly owned or it can be a separate entity or it can be Coinbase Prime or it can be an OTC desk. It's complicated, but basically market makers help the buyers and sellers trade the ETFs smoothly. And that's a very important part of how financial markets work. They keep some shares in their inventory to make sure there's enough liquidity. And then new Bitcoins only enter or leave the ETF when there's a big difference between supply and demand. And when this happens, the market makers create or redeem creation units, which are large blocks of ETF shares that can be exchanged for Bitcoin. And if the demand is much higher than supply, market makers will create new units. And if supply is higher than demand, they will redeem the units. And this is how the ETFs work. Not just with Bitcoin, but with all ETFs. And some ETFs, I think Eric Balchunas pointed out, have zero inflows or outflows on most trading days. And this is also one of the weird things that I found very puzzling is we had BlackRock for 4 or 5 straight days doing $1 billion in trading volume a day. Not one Bitcoin went in or out of the ETF. And that also got my attention. So how is that even possible? Well, this explains it. But does this mean the market makers have the ability to manipulate the markets for their own benefit? I don't know. Let's go to part 2. Exactly that question. So again, you can see here, high demand leads the market maker to buy Bitcoin and create new ETF shares. Low demand means the market maker is selling ETF shares. And by holding Bitcoin in their inventory, they don't have to constantly buy and sell Bitcoin in the market. And that's what we saw when we had that 4 or 5 days with, BlackRock doing a ton of volume, but there was no transfer of Bitcoin. So yes, the market maker can take in money from the ETF investors. They buy shares in exchange for cash, and then they use it to buy Bitcoin, and then they can hold that Bitcoin in their inventory to facilitate smooth trading of the ETF shares. The question is, imagine you're pulling in $500 million a day, and there's games that could be played, to sit and wait and time your buys and sells. It can be very lucrative. Let's go to some more data. This will be a quick video today, but a lot of charts. First of all, this is all of the days, all of the Bitcoin return versus flow T+1. So what I did was I calculated the amount of total dollar flow across all the ETFs and individually, because I have all the data. I do it every single day. And then the percentage return a day later, not the same day. That's the T+1, because that's how the ETFs are supposed to operate. And we get some very interesting trends here. You can see, for instance, on this flow here, I think 19 of the days had a negative flow and a negative return. 21 of the days had a positive flow and a negative return. 52 of the days had positive returns. So they're the 4 quadrants. So 19 in the bottom left corner, 21 or 22 in the bottom right corner, and then the other 52 were positive. Now let's look at my first chart. When I look at this market maker manipulation, again, this is just the first 35 days, but this is just to show you what I mean. You can have big inflows. All right, you can have 560 million, 360 million, 320 million, 400 million, all flowing in. And yet the price of Bitcoin falls. We're talking north of $1 billion, and the price of Bitcoin falls. The question is why? And this also takes into account the net flow. So the dumpage from Grayscale is buried in this as well. Retail selling $1 billion in 2 or 3 days? I don't think so. Let's look at another chart. Now, here you have the blue, and the blue is the actual flow of money. The red on the right, the blue is on the left axis, the red is on the right axis. The red is the percentage change. So we have had days where literally $1 billion is coming in a day, and the price of Bitcoin was falling, and this confused the heck out of me. We had a day as well where literally $550–600 million of Bitcoin was sold. The price did not fall. I was sure it was going to fall, because I calculated 85% of the Bitcoin price action since January 11th of this year is driven by the ETFs, the price didn't fall. I was tricked because Mr. 100 came in and bought 1,000 Bitcoin in like no time. See, they gobbled up this dump, and the price at the time is about 59,000. Price of Bitcoin, by the way, it just wicked all the way down. This is crazy. This shows you another manipulation game, because like live as I'm here, Bitcoin fell to 66,200. All right, minutes ago. Now it's 67.5. All right, $1,300 swing in 10 minutes. $1,300 in 10 minutes. So what the heck is going on here? All right, so this points massive inflows, price of Bitcoin falls. Let's break it down a little further with more percentages so you can see exactly what I'm talking about and where I have identified potential, allegedly, guy on the internet who knows nothing, market manipulation. All right, let's dig into this. So these are 4 big scenarios. On the left, you've got massive inflows, Bitcoin price falls. And again, remember, this is net, including the grayscale dumpage. Then you have massive inflows again, massive price dips as well. Massive inflows, massive price dips. Massive inflows over a continuous period towards the very end. I'm just pointing at the 4 big ones that I see. We had 7 days of huge inflows. All right, over $300 million a day for 7 days on average. The price falls. This data as well has a thing called a Pearson coefficient of 84.9% or 0.849. And that means that the ETF inflows explain 85% of the Bitcoin price action. The 15% is what I'm focused on. That's where the games are played. Will they continue to be played? Now there's more charts, I'm afraid. For those who hate charts, sorry about this. This shows you a very erratic set of flows. The red is the IBIT flow. The blue is the Bitcoin price. They're going counter to each other, but focus your eyes kind of in the middle to the left a little bit. Huge buys, no buys. Huge buys, no buys. Huge buys, no buys. What's going on here? How is that possible? And yet, even after huge buys, one massive buy, the price didn't actually do much at all. Then it just pared away over time and went to zero post-halving. And we had that 3 or 4 week time when people were literally about to throw themselves off bridges. Bitcoin price isn't going up. What's going on? And here we are. So let's try figure out what's going on here. Okay, this is the weirdest thing. So grayscale, we know grayscale. This is a fascinating chart right here. I put 2 trend lines in place. And what is completely mind-blowing about this is they are perfectly parallel to each other, these 2 trend lines. And I cannot make this up. I couldn't make a chart this perfectly parallel if I tried. And of course, the grayscale bleed is a big part of exactly what has happened for the first 92 days of the Bitcoin ETFs. But what's interesting is the direct correlation to price. So just look at the trend line, the red for the bleed for grayscale, and look at the blue trend line. That's the Bitcoin price. These 2 are parallel. As the bleed started to slow for grayscale, the price of Bitcoin went up perfectly. So there is good news here. That's not all bad news. The good news about this is the bleeding is definitely slowing. We're way above trend. I cover it every single day, and you can see that. But as this bleed slows, the price of Bitcoin goes up, which is awesome because there is that constant bid coming in from these ETFs, even on a lackluster post-halving couple of weeks. Now, there's one other thing that's very interesting to me too, is the mirror image of what I call IBIT and grayscale. Okay? Now, there's a couple of things you can pull from this. One, when one dumped, the other bought hard. They basically bought the bags. It's as if the bags from BlackRock were swapped straight, or bags from Grayscale were swapped over to BlackRock. Just allegedly, looking at this chart. That's what I read from the chart. And what's also happening too is since the red bleed of Grayscale slowed down, what else happened? The BlackRock buys stopped. What I get from this is, okay, the bleed slowing from Grayscale, and now BlackRock isn't in a position to buy as much as they used to buy. Or maybe just their buyers aren't buying. I'm not sure. But that's a very interesting mirror image. So, quick conclusion summary before I get to the final chart. I think there's a final chart. The Bitcoin ETF flows explain 85% of the Bitcoin price ever since January 11th of this year. All right, I've proven that mathematically. There are external factors driving price. Yes, always, like Mr. 100, like maybe stuff happening in other parts of the world, maybe miners selling, maybe some OTC desk activity, etc., maybe some premiums on Coinbase Prime. We're not sure. It's a tough thing to figure out. But between the T+1 delay and massive volumes, followed by zero ETF flows, is a cause for me to be a little bit suspicious. And so too are the massive ETF flows over 5 to 7 days, and then the price of Bitcoin falls. Very, very strange. Now, we did have that spike. We went from 60 straight to 73, 72, and then down again. But again, it's that 15% that I can't explain. So, final thing. One thing, and a lot of people, I think it's pretty clear, maybe some nefarious stuff is happening. It's very clear as well that the fact that money is being brought into the space by the ETFs is a great thing. It does increase the price of Bitcoin, which is good, very good. But this is what people always ask for. Should I buy a Bitcoin ETF, or should I own spot myself on my own cold wallet, or hold it on an exchange, or whatever else? I broke down the pros and cons of each. First of all, the pros for management and fees. If you have an ETF, it is professionally managed, and it does simplify the investment process. The cons are, of course, the fees are there, and there's no control over the underlying asset. Who knows if things go really or well in, it could be confiscated. Always be paranoid. That's what I started this video with. Then you got your custody and security. The pros, they handle all that for you, and they're very good at it. The cons, there is counterparty risk, and there's lack of direct control. Trading and liquidity. Pros, high liquidity. You can buy a bunch of this stuff in a heartbeat, and we saw that with the 13F filings. The cons, you're limited to exchange hours, and shares may trade at a premium or a discount depending on where you are and which one you're looking at. Also, taxes. The pros of ETF is very simple tax reporting. The cons are capital gains taxes and selling shares. And finally, institutional platforms. Very professional management, very convenient, easy to get on. And the cons, there are additional costs in some cases. Now, in terms of your ownership, if you hold Bitcoin either on an exchange or in a cold wallet, you can read for yourselves, but there's no fees. And but you do, being your own bank, there is that potential for mismanagement. You can lose your keys, etc. Also, custody and security. There's you need very good OPSEC. You have a very high responsibility on your shoulders for risk and theft, etc. But you do have that greater control. And then trading and liquidity, you can trade 24/7. You're not locked into market hours like you are with the ETF. But the cons, you can get very liquidity. Like I saw huge spreads between Binance and Coinbase, $1,250 just 2 days ago. Then tax implications, pros, direct management of capital gains tax, that's yours, and potential for optimized tax strategies too. But the cons, complex tax considerations, especially if you're doing, lots of transactions. And finally, institutional platforms, there is none when you own your own Bitcoin, but you have complete responsibility for it as well. So there are a lot of people like to go half-half. Have a little bit for the go bag on a key or in a phrase in your head, and have a little bit in your retirement account. That's an ETF. Mix it up, perhaps. Not financial advice here. And don't forget the Bitcoin only playlist for if you just like Bitcoin stuff. I will continue to monitor all of this stuff. We have the models built. We can track the deviations. We'll watch the Pearson coefficients, and we'll see if there are more egregious future manipulations. And I'll also try access exactly who the big buys are from all the different players too, including the sailors and including the dumpage from the miners and including the Hong Kong ETFs and other ETFs around the world. And they just launched a new ETF as well in the UK. for high net worth individuals, accredited investors, unfortunately. So that's the show for today. Hope you like it. Thank you, B-Man, for coming. Again, be paranoid. That's the advice for today, everybody. See you later. Bye-bye.